Welcome to the ETF.com video series. My name is Dave Noddick, Managing Director at ETF.com. I'm here at Inside ETFs with Rich Powers, the head of ETF product management at Vanguard. Rich, thanks for joining us.
Thanks, Dave. Thanks for having me.
So let's talk a little bit about Vanguard in this space. You've obviously been here forever, but a lot of your recent moves, I think, have caught some investors by surprise. Your moves into smart beta. How should we be thinking about the new Vanguard?
Sure. It's really not the new Vanguard, Dave. We launched 6 factor funds back in February of last year. It's really an extension of what we've been doing in active for a long time. We have a 40-year history of doing active, and so this is our first foray into offering our active strategies in the form of the ETF vehicle.
Well, I think a lot of people don't know, we put up some charts about how money's flowed out of mutual funds in general, yet Vanguard, year after year, you're the #1 asset gatherer in active management in the fund side. What else can we expect to come over from the active side?
Yeah, so we're looking at active as a distribution vehicle in the ETF structure. I think one of the challenges we think about in terms of looking at what we do in the mutual fund side and bringing it to ETFs is one, disclosure, right? If you have an alpha strategy where you're trying to add value, disclosing those holdings on a daily basis puts some of that at risk. The other challenge would be capacity. We know that on the ETF structure that you cannot turn off the creation mechanism, and we've had a history of closing active strategies when we believe that alpha is being compromised. And so those are the two things we're thinking about, but certainly looking at active as a potential vehicle or a product for our ETF.
Now, because of Vanguard's sort of unique mutual structure, the fees are sort of what the expenses are, but the rest of the industry is kind of in the midst of this fee war, sort of driving towards zero.
Yeah.
How should investors be thinking about fees? Is 1 basis point something they should really be taking into consideration when they're comparing a couple of different funds?
Yeah, what you're talking about is the Vanguard effect, Dave. It's more and more investors and more asset managers focusing on fees as a starting point. I think when you think about some of the broad beta strategies at 3, 4, 5 basis points, a basis point or two difference isn't really going to make a whole lot of difference in terms of the investor's outcome. Things like the actual index that they're tracking, the portfolio managers tracking error relative to their benchmark, tax efficiency, the actual exposure offered in the benchmark is really going to matter a lot more than, say, a 1 basis point difference in expense ratio.
So looking at 2019, coming into this year, you obviously had a great year in 2018 in terms of asset gathering, in terms of performance, almost across the board. What should investors expect from Vanguard in 2019?
Well, we have a pretty built-out ETF lineup, and we'll continue to add to that over time through our research process. I think what's really exciting for me is some of the new products that we launched in 2018 and seeing their uptake in the marketplace. So we talked about factor funds. We also launched 2 ESG products at the end of 2018, a US product and international product, broadly diversified kind of total market ESG products for those investors who want to invest that way. So we're excited to see the adoption of those products.
And historically, Vanguard's been pretty cautious about launching new products. You definitely haven't been playing flavor of the month and just sort of trying to jump on whatever's the latest marketing bandwagon. I was a little surprised to see those ESG funds come out, do very well right out of the gate. Are you building those products just to meet investor demand, or does it come from a position of, our investment team thinks this is something we should have?
We hear from investors all the time that they wanted to ETF version of the mutual funds that we've had in ESG for some time. We've actually had the largest index mutual fund focused on ESG, our FTSE Social Index Fund. It's almost a $5 billion fund, and we've been offering that for 20 years. This is the first time we're offering that type of strategy in ETF vehicle because investors want it, and we think there's a case for it from an investment perspective as well.
Well, Rich, thanks for joining us here. Thank you for joining us here at Inside ETFs. Tune in for more over the coming days.